Welcome to Exchange Rates UK TV. It is the 28th of July 2021. Taking a look at Cardano here. First, looking at the 3-week chart. So we're looking at the fourth 3-week candlestick that we've traded lower. We've consistently found support up against that 382 Fibonacci retracement level at 115. It is currently current 3-week candle is above the Kijun-sen, but I mean it's still so young of a financial instrument that we don't have a full complete 3-week channel or 3-week cloud. But looking at it here, it looks very much like it could just continue on higher. Weekly chart. If we take a look, and I want to make sure that we're only looking at 2021 for right now because the volume profile gets all messed up. The high volume node, if you look over there at 120, we are trading above that. And so we've broken up above to the next node. And here's the deal. Every day, actually when it has an easier time moving up than it does moving down right now. Now, I'm not suggesting that we're out of the woods yet for the short term, but there is a clear bounce off of the first oversold level in a bull market on the weekly chart. Okay, everything still looks bullish on the weekly chart. The lagging span is above the candlesticks, and as we transition it, so if you look at next week, and then you have the week after, which is, so next week is the week of the first, and then the week of the 15th. So this is first 15th. Week of the 15th, you'll have to see Cardano trading at 132 or higher on the weekly chart. It has to close around there before it starts to break out higher. I think that is a very, very normal and likely thing to see. And then it won't, if you're looking at the lagging span, it could stay sideways like this for a long time, for weeks. And I'm saying, let's just add next week into that mix. 12 weeks of sideways movement. If we project forward to where that's at, related to where we're at, that's week of October 25th, 2021. In total, actually, let me see here. This is from that high. Oh, well, isn't that fancy schmancy? That's in the 180-day cycle. Okay. All right. That's interesting. I get caught up in the minutia of the day-to-day analysis. Sometimes I forget to go back to Gann. So in Gann analysis, there's certain cycles that are really important. There's 45-day, 90-day, 180, 270. I mean, those are just the major ones. The 90-day cycle is the most important. And then the 180 days after that. So after we made that new all-time high, the consolidation that would extend out 180 days would be very normal. And I mean, we could probably see it ping pong between 180 and $1 through that entire process. But then as we get into the end of October, the beginning of November, that's when we would probably start to see it experience a pretty good spike higher. Now, looking at the daily chart, things look like they could be entering into a recovery mode. We have the bear market levels currently on the chart. That is not the daily. This is the daily. There it is. Bear market levels are on the chart. You can see rejection at 55. There's hidden bearish divergence that exists still. Still looks like it could have some downside pressure, but the move to go higher is not that difficult. Again, the volume profile is thinner the higher we go up. And I pulled up Motive Wave to just kind of, well, you really probably can't see this. This is a very horrible color I picked. Let me pause this and change that quick. So what you're seeing here is this is Motive Wave software. I've used it several other times before, but one of the things I like about Motive Wave is you can do Elliot Wave lazy style. And so what I can do is I can just start with a low that I believe is beginning of a new wave, which is very obviously we would start around that March 7th, 2020. And I can just drag a highlighted zone from there and then out into the future. And that puts out the future points that we can see. And we can show the ranges of the next of wave 2 and wave 4. There we go. But you can see that this is telling us that the first corrective wave, the second wave of this broader impulse wave, that has completed. And so really not concerned about when the third level gets there, but basically we're looking at that. We should just say $5. $5 is the next level to test according to the Elliott Wave levels. Now, that may seem kind of high, but we need to see if that's something doable. So that's where Fibonacci expansions come into play. That's it's green, and I meant to change it again. I had it blue just a second ago, but I can set the extensions to these levels based on the prior swings. And if I bring those forward, I mean, yeah, the 200% retracement's near $7, and then the 188.6 is that 540 zone, and the 1618's at $3. So yes, this is very much a doable a level to get to over the next over the next 180 days, basically. That seems a little lofty, but I guess you have to ask yourself a question. In September of 2020, when it was at 7 cents, did you think Cardano was going to hit $2? Probably not. I think suggesting a move from Cardano moving from $1.20 to $5 or $6 after it's already been at $2.50, I think that's a very much more rational, realistic target than 2 cents or 7 cents to $2.50. That's a very, very likely target to get to. So that's something that we should identify and look towards. As far as when I think that's going to, as far as an entry, I think, for Friday's video, I'll go over that a little bit more, but I just kind of wanted to give you some forecasting here on Cardano. But anyways, y'all have a good rest of your trade day. Thank you for watching. From All the Shit Exchange Rates UK TV, please don't forget to like and subscribe.